You've definitely given me a lot to think about. I'll be hitting you up for making a better decision for this investment now. Nikhil, when it comes to like investment for you now, I guess not me, now it's you. I know that you enjoy construction now.
Yes, very much so.
How could someone like me, or should someone like me, average income, still doing okay, but wants to get into that space, how the hell would I start?
You can either have exposure to construction projects where you are an investor and anyone with any kind of income and investment amount can get into that, or you can be the developer yourself. So I guess the question is,
I want to be a developer.
Do you just want the financial upside, or do you want it to be a part of your business and your career and your livelihood?
What if I just wanted to be a part of it? Is that something that people can get access to? Like,
absolutely.
Can I reach out to someone and be like, hey, I don't care what you're constructing, I just want to be a part of it?
Absolutely. And what's crazy is you could be a massive company like Meriton, or you could be a small developer out in the suburbs doing duplexes and townhouses. And everyone, whether you're a Meriton or whether you're a small developer, they all access private funding to get development projects off the line.
Okay, hang on. Why the hell am I not doing that for my next purchase then? Why not be a part of a development project instead of buying an existing property somewhere for like bloody $500,000?
It's much more riskier. So number one...
Risky real estate is always good.
No, well, you aren't buying the property. You are giving someone that you trust the entire project. So you are a co-investor in a development project. So obviously that comes with inherent risk, and not everyone is able to take on that risk. But also you are an equity owner in the development. Not all developments make money. Like if you got into a development pre-COVID and all of a sudden, you had your numbers all worked out and everything was fine, and then all of a sudden COVID happened, you're all of a sudden stuck holding an asset that you can't sell, you can't build, you can't get workers for, and you're just stuck holding it for 2 years. So now all of a sudden you've got to fund 2 years worth of interest costs in your feasibility, and it could make or break the entire project.
Okay, can I ask you then, because I know I've been very close to putting pen to paper on these development pyramid scheme things where they invite you to a conference and they explain these huge 3-hour lectures about, property, we'll build an apartment building and you should be a part of it and give us your money. Are they any good?
No.
Why?
Well, it depends why you are investing. So there's always a market for everyone, and that's why there's these developments will get off the line. A lot of the people that buy those off the plan apartments where you do put a deposit down, you are a part of the project without inherently knowing you're a part of the project. Because when, let's say, a developer goes and let's say...
So you don't really know what you're buying. You're just being a part of something that is about to be built, and then they'll define what you own later. Is that why?
No, and it's like, let's say, see this apartment block that's being built over here.
Yeah.
All right? Not many people have the cash to fund the site acquisition, let alone the building costs. So you have to go and get lending from a big bank or a big financier for that. Now, people don't even have the deposit for that. So what do? They go and buy a piece of land, which they probably have got the money for. Yeah. They go and spend the money, get all the architectural stuff done, and say, we're building, 150 apartments here. Then you go and you pre-sell them. And that's what the seminars are. So they'll go and say, or like the bank will say, if you can pre-sell 30% of these, we will fund the rest of the development because we've got contractual commitment that 30% of the project or 50% of the project will be funded once it's developed. So on the basis of those pre-sales, where you might only have to put down a 5, 10, 50, 30 grand deposit, the builder's happy because they're now able to complete their development.
Yeah.
Investors who are putting their money in are happy because they're now, they're marketed, you can get this 600 grand apartment today and in 2 years it'll be worth 750. So you're making a bet that it'll be worth more in 2 years.
So it is a gamble.
It is still a gamble, but like my thing is like, why are you ultimately buying an apartment? Like if you are buying purely for investment, probably better things that you can do. But if you're buying because you want to live in that place, because there are some great apartments being built in locations that you might want to live in. And under those scenarios, you might be better off being a part of the development by, being one of the pre-sale purchases.
Explain to me something. There's a little off topic, but I think in the same context. Didn't our parents lose a little bit of money in India with this happy homes?
Same thing.
It's the same thing, right?
Same thing.
Can you explain to me what happened there? Why the hell did they lose their money? Or was it a jip? Or was it...
That was completely different. That was obviously in India, the regulations around property investment and, paper trails aren't a very profound and data matched thing in India.
Okay.
Our parents were sold a plot of land, and that same plot of land was sold to 10 other people.
Oh, okay. So they sold the same thing to a bunch of other people.
Yeah.
Because I remember going...
That was pure fraud. That's probably
was all fraud.
That's probably not going to happen here.
The conversation came up again when we were there just this time, and they said, should we still try and go get our money back? But I'm pretty sure they're completely gone, right?
Well, now the question is, who are you going to get your money back from? The guy that sold the property, which the company no longer exists? Or do the 10 people that supposedly hold the contract to this property, do you divvy up the value 10 ways?
Yeah,
right?
So what was the value of us going there as kids and pissing on it to prove that it was ours? Remember we pissed on that? Our DNA is in that land now. God.
Well, you've also pissed in plenty of other places. Do you own that as well?
I pissed in many of us. Remember that time we pissed on the bank? For me now, realistically, we're looking at what? A new purchase for me, and you're saying what areas to look at. Yep. You're saying Far North Queensland. I'm saying somewhere else a little bit more metropolitan, like Melbourne or something like that. What is the current market looking like for the average person like me to look at their first investment?
Sure. So most people are coming to us looking to buy properties in that 400 to 800K range. And most people have different goals and objectives and timelines. You have different profiles of how income will change over time. You have, your household income will be very different to another person. Your goals are very different to another person. Your age and stage of life is very different. So it's not like there is this one magic place that everyone should buy.
Yeah.
It's more what's going to make sense for you so that you can unlock the broader dream or the broader goal you're hoping for. So when you buy in, a North Queensland, for example, you're going to get a higher yield. You're still going to get capital growth, but it also increases the risk profile of that purchase. So inherently, not that it's always like this, but capital cities, we have an inherent bias that they are the more safer and blue chip investments. Now the data shows otherwise.
Blue chip investment.
Blue chip means like it won't go down. It is like a safe long-term bet, which for the most part is true.
Yeah.
The data will say otherwise, but as advisors for people making investments, you also have to recommend an investment that is in line with your risk profile and your biases as an investor, because you don't want to make an investment even if the numbers stack up, but you aren't able to sleep at night and be peaceful about it. Still have to match your level of risk to the investment that's being recommended. And a great way to, strip it back down to bare bones, you can go and buy a blue chip company like Apple. It's going to do well over the next 20 years potentially, or you can go and buy a little mining company on the stock market for 1 cent a share. You could probably make 10 times as much money, but you could also lose it all. And you can make money in both. It's not that one is better than the other. It's just what does your risk tolerance allow you to invest?
When you spoke about this long-term goals or what someone wants to do, is that a question you ask in Handle when you speak to a customer? Like, What are you trying to do in the next 5 to 10 years?
Yeah, exactly. Because the worst thing that I could ever do in the business is to recommend you a property and then you come back again in 12 to 18 months and it's a great property. I recommend you a property in 12 to 18 months, you're capped out at going at it again, right? So most clients, if your goal is just to buy 1 or 2 properties and pay it up over your lifetime, that's fine. But most clients come to us and say, we want to build a bigger and bigger portfolio because our ambitions require us to, because we have broader ambitions and financial goals in life.
Yeah.
So you don't want to be in a position where you've executed a property and then all of a sudden you can't expand your portfolio, you can't do anything more. And that's kind of where it's important to make sure that your next purchase still has the broader goal in mind so that you can elevate and go at it again. And the way how we do that is not only the property itself, but also in what structure are you buying it? Is it the right time to consider buying it through a trust or, might be going through your superannuation or your SMSF? At the end of the day, it's how do you use property as a vehicle to get you closer to your financial objectives?
Because now I feel like I have to ask myself that question. If I chose to now invest somewhere in Far North Queensland or Victoria, or whatever it is, it means that I have to live at the place I'm living at longer.
Yeah.
Yeah. I don't know if I want to keep staying there for that long. I want to upgrade where I'm staying.
But what does upgrade mean to you?
Something bigger, something newer.
Bigger, newer?
It doesn't necessarily have to be a house. but bigger and newer. And I get the idea of rent vesting. I get it.
Yep.
I don't know. I still hate the idea of renting.
I mean, again, very personal choice. I'm renting, but soon will not be renting. I get the whole idea of rent investing. I have a view that you should at least have some ownership in your long-term perspective.
Correct.
There are some tax advantages of living in a place, so make the most of that. There's no hard and fast.
Babe, now you know how much equity I had. What would happen if I were to take that equity and buy something bigger, maybe nicer, but still within the same area that I'm looking at?
That's also a great idea. Like
In the long run, I want to know, will it still work out financially? Like, is it still a good investment?
it depends. What are you buying? So you're moving from an apartment. Are you going to be moving?
Apartment or maybe a townhouse?
Yeah. So if you're going to a townhouse, it's probably a better investment. But if you're moving to a prettier and nicer apartment, I'd be like, why don't you just rent that prettier and nicer apartment?
Yeah.
Like, if you're going to get a block of land, or you've even said that you want to get a warehouse and, reconvert it later, something like that is probably a more beneficial thing to consider. But if you're just swapping for like a better kitchen and bathroom and it's still an apartment, I'd be like, go rent in a pretty place.
Go rent a good place. Because if I went for some sort of townhouse, I think maybe there is a few things, I wouldn't say in my budget, but maybe slightly outside of my budget, but within that same area where I'm currently staying. I might be able to find something in that space. But I don't know if that's a smart decision.
Well, that's all.
Like you would say, I should be looking at somewhere else and then buying something with a piece of land.
Another way to think about it is, what levers do you have at your disposal to increase your income? Because if you feel that you've got other things you can do, you can go harder on your own place. You get a better place, you get the benefits of tax-free capital growth. But if you feel that your income is going to be capping out over your life, then you kind of have to think about, hey, what do I not do now for the benefit of future me and compromise now for the purposes of investing?
That's absolutely true. This is a hypothetical scenario where my income would not increase in the near future.
Yeah.
Based on this income, what is the best investment strategy? I guess this is what the average person would be thinking. Who knows? Maybe I build a hustle now and my income does significantly increase in the next couple of years. Then I can still have the best of both worlds, like Hannah Montana says. I can still get an investment somewhere else and upgrade my current lifestyle as well.
Exactly.
Vignesh keeps saying I should look at Ryan, but I don't want to move to Ryan.
What's wrong with right? Billy and I were talking about this just yesterday. We were like, we're going to go to North Strathfield and play arcade. 15 minutes. And then last week we were like, we're just going to go to Luna Park to walk taco. 20 minutes. Ride is so accessible. It's in the middle of everything. And right now, we're going to Harris Park to have Indian food. What's it saying? 10 minutes to go. It is so accessible.
It is. I get it. This is such a subjective thing for every different type of person. I guess I've enjoyed this Eastern bubble so much. I'm not even saying I'm in the Eastern bubble. I get it.
Spend your weekends out here.
I get it.
And where are we going after this? I'm dropping you off
to Wentworth Will.
Eastern bubble for sure. Bubble. You break that bubble every weekend.
I'm just saying, not every weekend. It will be every second of it. We can all break it, man. You get everything you want over the bridge, Nikhil. I'm telling you, you move to the eastern suburbs, you'll never move back. You get everything you need around that, no?
Where have you been living for the last 4 weeks?
It's nice. It's a little quiet. No, I miss people. I like being around the busyness. When the weather's nice, where's your nearest beach? It'll go like 30, 40 minutes to Bondi.
No, it isn't. It's so accessible to go to Balmoral.
Oh, Balmoral. Yes, fine. You got Balmoral Beach. It is a nice beach.
Yeah.
Stop it. I'm not moving to Ride. You're in Gosford, okay?
Yeah, no, I very much like a Central Coast.
What do you think about Central Coast? Is it still a good place to invest in?
Yeah. So now, this is my hypothesis for the next 3 to 5 years.
Yeah.
The Central Coast will completely boom. And the reason for that...
I don't think so.
Because everything's on a relative basis, right? Like, investments are done on a relative basis. There's not like, this is a great investment. You always have to think about, what else could I put this money in? So on that basis, there's always going to, like, if every single investment in the world grows at 100% a year, that's an average investment. But if an investment grows at 100% a year and if something else grows at 10%, it's obviously a better investment. So you have to think about, where else can I put my dollar? So in the context of buying in Sydney, right now, you kind of have to get affordable housing. You have to go either out west, northwest, to these new fringe suburbs where there's beautiful homes, where you're buying land for $1.25, sometimes $1.5 million, and you spend 800, 900, really quality homes are being built on these blocks of land. So your all-in cost is about two and a quarter million, right?
Which is not bad.
Which is not bad, but you are a fair distance away from Parramatta or even a distance away from the CBD. And you kind of have to think about that in terms of where the world is changing. Like, I think the world is switching from work from home to back to work in the office.
Correct.
So it's more important to think about connectivity all over again. And on a relative basis, you're spending this kind of money to go out west, to go down south, to go out northwest. But if you spend the same time on the train, yes, if you go by car, it is a longer traveled by distance, but similar time in the car, similar time on the train, you can go up to the southern part of the Central Coast.
That would be great.
Buy something right 5 to 10 minutes walk to the beach, to the lake, have absolute fantastic lifestyle. There are great schools coming up, selective schools in the area, and it's still cheaper than buying in the fringe suburbs of Sydney.
I really like that theory that you made when you were looking at Central Coast a long time ago, like 4 years ago. You were saying if you take the same radius, assuming that the Sydney CBD is the center,
Yep.
if you took the same radius from, say, Blacktown to the city, and you just took that same radius, go straight up, same distance of commute time, but the quality of life and the style of place and the things you'll be doing, very different.
And if anyone has gone out that way, just drive through Gosford CBD.
Yeah.
They are building high-rises to rival that in Parramatta CBD. High-rise apartment blocks for residential, but you just kind of go, if that's what they're building now, everything's going to be rezoned. Give it 10, 15 years, all those smaller blocks are going to be rezoned, and it's going to be a hub as similar as that, right?
Okay, can I ask you, do you have your essentials, Bunnings or fantastic furniture or something to buy?
Everything.
Tools, servicing.
This is another thing that I look for, and especially for clients when we're buying in regional areas, is do you have a Zara, H&M, Mecca, Sephora? If you have these in any suburb, you kind of know it's affluent enough and there's a market to pay for those types of goods. The Central Coast has that.
You have a H&M and a Zara and a
We have an
Sephora.
H&M, Sephora. Yeah, just go to Erin Affair. It's got everything.
Sephora?
Yes.
That's wild. That's actually a really interesting checklist to check when you're looking at an area. If you're Zara and H&M, that's...
Zara, H&M, Uniqlo, you look at all these premium-ish brands where, you have to spend decent dough to get the basics.
You look at schools and things?
Yeah, there's private schools, schools are now an up-and-coming thing. There's a lot more migrants moving out that way because there's a very good, Gosford is now a selected school in that particular area. A lot more migrants moving out there, a lot of infrastructure spend going into the new hospital over at Gosford as well. And little anecdotal things that you'll pick up on. If you ever listen to the weather, before it was like, Penrith, Blue Mountains, the weather is X. They now drop in Gosford.
That's interesting. So you can even check a weather report to see what are the focus areas that they would be communicating weather.
I mean, again, it's just like, where they want to focus their attention on. It's not like a hard and fast rule, but, if you're consistently getting the weather report in an area, it kind of means a little bit more important than it was a year ago when they didn't care about it.
Weather report, that's an interesting case.
It's not that you focus on that, but it's just like an anecdotal addition to all the other hard data points out there. So I'm super
check H&M, Zara, weather report, Nikhil.
Like, I'm so hard on the Central Coast because you could be in Terrigal, right on the water, not right on the water, but like, a few streets away, 5-10 minutes walk, $1.5 million. And you're like, that's cheaper than buying in Pennant Hills. And you're like, if I don't have to go into the city, I only go to the city 2 to 3 times a week, an hour and a half on the train, you kind of go, this is becoming more and more of a compelling reason to live there.
Yeah.
I mean, also I do have a bias because I do live out that way, but it is getting more and more compelling.
Would you say the same about the south in the same radius? So like you said, from Blacktown to city, you go up north. What about down south? Is there potential down there?
It's different because the connectivity to get down to Wollongong in terms of the motorway and the train line is not as good as up north, because it's relatively better developed because you need a better connection to Newcastle. So apart from Wollongong, there's nothing else there to, demand that increased investment in infrastructure spend. But, Newcastle is still a major, meaningful city. So the connectivity up and down the coast will just continue to get more and more attention.
I have a family friend that recently moved from New Zealand to here, and she was trying to figure out where to live. She's going to be working in the CBD, and she's going to be renting with her friend. And it was so funny. I was trying to give her a demographic and, lifestyle explanation of every suburb. I was like, western suburbs, you're going to get ethnics, you know. You're going to go up north, you're going to get the rich. You know, you're going to go down south, you get the rich walks. You get all the Asian restaurants in the Stratfield area. And I was trying to explain all of that. You start looking at the map of Sydney almost based on demographic and like lifestyle and income and the type of things you can do around there and how you feel around there. So it's crazy now thinking about investment in real estate, looking in that spaces. Which suburb do you think in Sydney is now becoming, I'm not meaning affordable, I just mean which suburb is really, you know, tickling your fancy that's very different to maybe 5-10 years ago?
Again, it's on a relative basis.
Yeah.
The inner ring is providing more value than a fringe suburb right now.
Inner ring, that means CBD, you're saying?
No, sorry. When I mean inner ring, I mean like around the Concords, around the Stratfield.
Right in the middle of Sydney.
You know, right in that inner ring, Ermington, those types of areas. And, you know, there will always be a requirement for a home with a backyard. Like, I think that's a fundamental part of Aussie culture. No matter what they say, apartments will always be a transient place for families to be, but the goal will always be, how can I get myself my own place with a bit of a courtyard or a little bit of a backyard? That will always be in high demand. So I don't see, I mean, it will happen as a function of financial needs where people have no choice but to live in apartments, but there will always be an aspiring demand for a house with its own land. Now, what you see happening in the fringe suburbs, they are selling these blocks on 350, 400 square meters.
It's not small.
Which is, again, the people that are buying them, they're coming from, you know, majority migrants. They're coming from areas where that is considered a large block. But in the cultural standing of Australia and Sydney, it's a relatively small block. So you kind of go, if that's the type of if that's the type of budget people are paying for in these fringe suburbs, what you're getting in an Ermington or that inner ring, you know, between Parramatta all the way to the CBD, people are doing subdivisions on blocks and doing duplexes or townhouses. I think that is, in that ring, is the next place to buy because you are getting land.
I'm seeing a lot of Stratfield crazy house.
Concord, beautiful homes being built, and you kind of go, what is that? And like everyone's like, oh, I don't want to live in a duplex.
Yeah.
But apparently a duplex in the inner ring on 400 square meters is somehow, at the same price point, by the way, is somehow less desirable than a 400 square meter, you know, self-standing home in the fringe. I personally don't understand that difference. I would rather the inner ring house built just as nicely, costing around the same price, but you're, again, more accessible to coming back to work. You're working in Parramatta, you're working in Bella Vista, you're working in the CBD. That's my personal view on, if you are buying, that ring will always have a lot more value.
You've definitely given me a lot to think about. I'll be hitting you up for making a better decision for this investment now.
Oh, anytime. And family and friends will do you all a good rate.
Oh yeah. Let's go get some Indian food.
Oh, that smells good.
Peace out.
Bye-bye.